Imagine waking up tomorrow and finding out you can't open a bank account because of a digital red flag you never knew existed, or suddenly realizing that your favorite budgeting app has been locked out of your checking account overnight. It sounds like a tech thriller, but for millions of Americans, this is the new reality of the 2026 financial landscape. We are witnessing the most significant overhaul of the American banking system in a generation, and if you aren't paying attention, your access to capital could be at risk. Welcome to another high-stakes episode of Money Facts USA, where we strip away the jargon to give you the raw truth about your wallet. Today, we're diving into the massive regulatory shift that is fundamentally changing how banks see you, how you see your data, and how the government is stepping back from the traditional guardrails we've relied on since the 2008 crash. For years, we've operated under a system where the big guys in Washington kept a tight leash on how much risk your local bank could take. But as of January 2026, those leashes are snapping. Federal regulators have pivoted toward a lighter, more innovation-friendly approach, effectively telling banks they have more room to run. On the surface, this sounds like a win for the economy, but for the average consumer, it means the safety net just got a little thinner. We're seeing a massive reduction in oversight staff at agencies like the CFPB and the OCC, which means there are fewer eyes on the street watching for predatory lending or unfair fees. Here at Money Facts USA, we believe that when the watchdogs go on break, the burden of protection shifts directly onto you. You can no longer assume that the system is looking out for your best interests. You have to be your own first line of defense. One of the most explosive changes hitting your phone right now is the official rollout of open banking under Section 1033. Think about every time you've linked your bank account to Venmo, Mint, or a high-yield savings app. Until now, that was done through a clunky, insecure process called screen scraping. But this year, the largest U.S. banks are being forced to hand over the keys to your data directly to you. This is a double-edged sword. On one hand, you finally own your financial history, making it easier than ever to ditch a big bank with high fees and move your money to a fintech that actually rewards your loyalty. On the other hand, your data is now more mobile than ever, and in a world of AI-driven fraud, that mobility comes with a target on its back. If you want to stay ahead of the curve, you need to stay tuned to Money Facts USA so you can navigate these digital waters without getting capsized. Let's talk about a phrase you're going to hear a lot this year: debanking. It's the new silent killer of financial freedom. Under a new executive order that went into full effect this month, the government is cracking down on banks that close accounts for political or reputational reasons. You might think this only applies to big corporations or controversial public figures, but the ripple effect hits everyday consumers too. Banks are now being required to provide much more documentation before they can legally fire you as a customer. This shift is meant to guarantee fair banking for all Americans, but it also creates a massive administrative backlog. If your account gets flagged by an algorithm tomorrow, the process to get it reinstated could take months because the rules of engagement have completely changed. You need to understand that your relationship with your bank is no longer a private contract. It's a regulated battlefield. The way you pay for your morning coffee and your monthly rent is also getting a 2026 makeover. The Federal Reserve is pushing its new payment account prototype, which is designed to let non-bank tech companies get direct access to the Fed's internal payment rails. This means faster transactions and lower fees for you, but it also means the line between a bank and a tech company is officially gone. We are entering an era where your social media platform or your phone manufacturer might soon offer the same services as Chase or Bank of America. But here's the catch. These new skinny accounts don't come with the same FDIC insurance or consumer protections you're used to. You're trading safety for speed, and if you don't read the fine print, you might find yourself holding the bag when a tech glitch freezes your life savings. We also have to address the junk fee war that is currently being fought in the courts and in Congress. While the federal government has rolled back some protections, individual states are stepping up to fill the void. We're seeing a massive wave of state-level laws targeting credit card late fees and convenience surcharges. If you live in a state like California or New York, you might see your banking costs drop, while someone in a more deregulated state sees their fees skyrocket. This patchwork of rules means that where you live now dictates how much it costs you to be poor. It's a divided financial America, and your ability to build wealth in 2026 depends entirely on your knowledge of these local and federal shifts. As we look at the roadmap for the rest of the year, one thing is clear. The era of set it and forget it banking is over. The institutions that hold your money are currently recalculating their risk, rewriting their terms of service, and bracing for a year of intense competition and technological upheaval. You cannot afford to be a passive bystander in your own financial life. Every time you get a notification about an updated privacy policy or a change in terms, that is a signal that the 2026 rules are being applied to your hard-earned cash. This is a year for the bold, the informed, and the vigilant. Make sure you're subscribed to our updates here at MoneyFacts USA, because we're going to be with you every step of the way as we navigate this new American frontier together.